Hi, this is Zach May with the weekend edition of the Bulletin Board at Heroes here at Zach's Traders Cafe for Sunday, the 21st of January. While the S&P goes to record levels, we see the FTSE in a pathetic, sort of narrowly rising trend channel there from back in August. The recent bounce off 7,400. Top of the channel there just towards 7780. And the first hurdle here, the 50 and 200 day moving average is around 75.50. But I suppose the only positive here is that we bounced off late November, early December support for the market. So not looking for an imminent breakdown here. The S&P and American markets notwithstanding. Moving along to the DAX, and here a beautiful rising trend channel here from October. We've had a bear trap rebound from below 16,500. Hopefully we'll break that line of resistance, red line of resistance there around 16,700 from last month, and then head up towards the top of this channel, which is heading up towards the 17,900 area. That could be a target for as soon as the end of next month. RSI just above the neutral 50 level, so that gives us a bit of a positive spin there. On the downside, we don't want to see an end of day close back below the 50-day line, currently at 16,300. Moving on to the Dow, and here we've got break to new territory here towards 38,000, and rising trend channel, very steep one there from October, and the market generally been able to keep pace with it. Top of the channel there, 39,300. We're looking for that by the end of next month. The way things are going, might even get it by the end of this month. But while we're above the floor of the channel there, and recent support 37,000, looking for 39,300 on the Dow. Moving along to Bitcoin, which is still regrouping after the rug was pulled in the wake of the ETF news, but we've got a rising trend channel here from back in August. Floor of the channel there around 40,000. Above that, we're looking for an end of day close through the rising 50-day moving average of 43,200 to give us a retest of this month's resistance, maybe by the early part of February, but looking for 50,000 plus by the end of next month, while we remain above 40,000 on that market. Better look for gold at the end of the week with a bear trap rebound from below a rising 50-day moving average. That tends to be a very good signal. Break of the 2055 area should be enough to break that December resistance line and take us up to 2150.60 as soon as the end of next month. RSI push now back above the neutral 50 level. Moving along to the stocks, and some of these are fundamental, some of these are technical. You can maybe guess which ones are which. Here we've got Atlantic Lithium, where we've bounced off that uptrend line there from back in August. Top of the channel there, back up at 30 pence, which we could see as soon as the end of next month. If you're cautious, though, you'd wait for an end of day close of the RSI back above neutral 50, and maybe even wait for the market to get above the 50-day line. But the RSI above 50 should be enough of a trigger to point us back towards 30 while we remain above the 20 pence level. Bit of a stir in Ajax at the end of the week, and given that it's not exactly the most liquid stock in town, one would imagine that there is some fundamental basis for that. Obviously, that's just guessing. Here we've got a rising trend channel base, top of the channel there for 7.6 pence, and we're looking for that while we remain above the 50-day moving average around the 4.3 pence, I suppose 4 pence. The stop loss there, I imagine the spread there not very thin. On to Eskin, and here you can see possible falling trend channel base here. We've got a bullish divergence against the lower January support, and initial target here 1.3 pence over the next 2 to 4 weeks. After that, maybe the 50-day line at 1.6 pence for early February. If you're cautious, we wait for the RSI to get above neutral 50, but this looks like the start of a bear trap rebound from below a penny. Moving on to one of the better movers of the week, which was, and maybe still is, fusion antibodies. Here the good news is that we went a long way to retesting the November resistance for the shares above 9 pence. Decent end of day close above the resistance on the way down around 7 pence. So long we stay above 7, the greater the chance of 9 pence by the end of this month, backed by the rising 50-day line, and a whole array of blue candles there in recent days. Moving on to Great Western, and here you can see that the shares have basically all but hit our initial target there, which was around the 200-day line, 0.66. above that 200-day line, looking for 0.1 pence as soon as the end of next month, while we're above the rising 50-day moving average around 0.05. Also looking good at the moment is Hemogenics, which is stretching towards our initial target. The first one was actually the top of that gap from back in January last year, around 3 pence. Might be able to squeeze up to 3.2 pence, perhaps even as soon as the end of this month, the longer we stay above the 2.5 pence level, which was the initial January resistance. Mossman's been a difficult candidate over recent months and years, but got another chance of salvation, breaking above the 50-day line at 0.014. Above that, best case scenario would be to test or retest 0.03 pence sometime by the end of next month. One of the best calls here has been Oriole, which has hit all its targets. The first one was 0.13, the second one was 0.23, let's say, and the third one was 0.31, and we overrun the highway by quite some distance. Overshot the runway, I think is the right analogy. The only one left now is 0.47, which is an early 2022 resistance line projection. We're looking for that by the end of next month, while we remain above 0.32, one of our older targets. Nice bounce from Panthera, where it was noted that the shares were at the bottom of the range, and if I can spell the name of the company properly, we'll be able to see the chart. Here we are, and here you can see that we had a bounce off 5 pence and a nice close for the end of the week. What's interesting here is the 200-day line at 6.5 pence is rising. That gives us an initial target here of 7 pence, hopefully by the end of this month, and maybe as much as 11 pence plus by the end of next month. As you've seen previously, the shares bounced quite sharply from the bottom of the range. Premier African is interesting in the sense that every time you think it's over, it bounces back. Here we've got the old support there for the shares, 0.2 pence. We want to see an end of day close above that to then give us a move back to 0.3 pence, even if the shares then sell off after that. A rather unusual selection next, Quartix, and here we've got this potential W-shaped rebound. Rising 50-day line is very important, and above that at £1.52, we're looking for the shares to fill the gap down up to £2 by the end of next month or even sooner. Also good to see Strategic Minerals make a revival this year. We had a bear trap gap reversal, one of our favourite signals, from below the old May-October support for the shares above 0.12, looking for 0.25 by the end of next month. Great end of week close above the 200-day line at 0.15, and we've already got a rising 50-day moving average. Lots of speculation regarding Synergia, some of it even from the company itself. Here we've got a rising 50-day line, good consolidation, of course, sideways shuffle along the 50-day line at 0.08. Initial target here, 0.11, which hopefully, with the speculation, we might even see tomorrow, and then up to 0.16 by the end of next month or even sooner. Moving along to Synectics, and here another bear trap gap reversal, a mid-move consolidation based around £1.40. Above that, looking for not only £1.65 and recent December resistance, but as high as £1.80 by the end of next month. On to the last three. The first one is Tiger Resources, and here, after a long time, we've seen the shares start to stir. Again, the shares are so illiquid normally that any stirring has to be regarded as significant. We've got a little bullish consolidation there above the 50-day line at 0.18. Above that, looking for 0.4 rather by the end of next month. On to a personal favourite of mine because of the uranium situation, Thor Energy, and it has performed. Bear trap reversal here from below the rising 50-day line above the 200-day moving average at 2 pence. We're looking for 3 pence by the end of next month, hopefully much sooner. The drip of positive RNSs looks like it's working finally for Zenova, and here the shares bouncing and filling that gap from July around the 3 pence area. Above that, we're looking for 4.5 pence by the end of next month, backed by an uptrend line in the RSI window. That's it for me today. More updates tomorrow.